as GTL. And what we're going to go over today here is we're going to go over a couple of products that we have available here at GTL that work great in the senior market. One being the CHS Protection Plus plan, and the second being an Advantage Plus product. Hopefully many of you have had the opportunity to offer at least one of the with the Advantage Plus, or now the the first product will be a pretty fun product to talk about. But before we get into the product stuff, I want to thank the guys over at Medicare Advantage Specialists for putting this together, and giving us an opportunity to talk product and do some training on the plans. I'm going to try to go over as much as I can information-wise, so that you guys, as agents, can go out there and feel confident in what you're telling your clients is how the way it is. And so you should know pretty much about as much as I would know by the time we're done with this. All right, so with that being said, a little bit about GTL. If this is the first time hearing about Guarantee Trust Life, well, it's GTL. We're located in Glenview, Illinois, which is a suburb of Chicago, just north of the city. We've been in business now for 76 years, and we're being led by the third generation of Holsons, which is the founding family, the founders of the company. We are a mutual company, and so it's got definitely some good advantages to that for being a mutual, meaning that we're probably considered more of a small to mid-sized type of company, where we're more agile and nimble, than the big conglomerates out there that to try to get things done. It's definitely from my perspective, I can tell you I've been here at GTL now for 8 years, and it's been a great experience, from that perspective. So if that helps a little bit from kind of getting a little warm fuzzy feeling about the GTL here. Part of the warm fuzzies here is that Weiss Rating Agency. If anyone knows if you guys don't understand who Weiss is, they're tough to get a good rating from. They're considered probably the toughest rating agency out there. And this year we just got upgraded from them from a B- to a B, which is good. And if you see on the chart there, you'd see that the B would translate to an AM Best rating. If it should translate to an AM Best rating of an A or A-. So we think it's awesome that in this time and age of things are going crazy out there in the world, that Weiss thought that we're doing a good job, and our books were looking that good that they wanted to increase our rating. So we're very excited about that. But the next piece here, I guess, is to take a look at our product here, CHS Protection Plus. This plan here just came out a little over a month ago. It's available in a number of states. It's not across the country and widespread as because of it being just a new product, but we're constantly getting new product approvals. And the product approval, if you guys are curious to know which states it's available in, if you go to our website at gtlic.com and you click on the Agent Connection, at the top there you'll see where it says Product Approval Chart, and you can definitely get access to our Product Approval Chart there, and you'll get a PDF of it. And just look up CHS Protection Plus, and it'll see what state that, what's your particular state, if it's available in or not. This product is an awesome product in my estimation, in that for other cancer plans that are out there in the field, because it's a cancer, heart attack, stroke product. I like to call this kind of a mini critical illness plan. For those of you that work in the underage market, you're familiar with traditional critical illness type products. This is a mini CI plan here. And also, in addition to it being a mini CI plan, this is 3 products in one plan. And we'll go over what the 3 products in one are in a second here. The first one being the cancer coverage by itself. People are probably wondering here, okay, why should I sell cancer insurance? Well, the reason you want to talk about cancer insurance is that 1 out of 2 people will get diagnosed with cancer. That's just that's a fact. We all probably take a look at when we get a chance to go home and relax in front of the TV, or even when we're surfing the internet and start reading other types of news coverage with sites, MSN or Fox or whichever one, any of those types of sites. see that they're always talking about cancer coverages. And with them talking about cancer coverages, cancer coverage or issues with cancer, like they may have gotten a new situation, a new breakthrough of cancer, or someone or some celebrities gotten cancer and are talking about it, or whatever, or what the statistics are and so forth. It's always out there. Everybody knows somebody that's been diagnosed with cancer and knows what has happened to those, knows what's happened to those families. So, in regards to the cancer, probably the biggest statistical perspective that you might want to know about it when it comes to medical bankruptcies is that of all the bankruptcies that occur in the U.S., half of them are due to medical reasons. And of those half, 75% of the folks did have major medical insurance. So there's a lot of bankruptcies going on out there. Half of them are due to medical reasons, and out of 75% of those half have major medical insurance, so they're covered. They have insurance coverage. So it's a pretty astonishing number to know that medical bankruptcies occurred even though folks have insurance coverage. It's huge. And so that's where having a cancer type plan or even a heart attack stroke plan could be very beneficial to your clients. It doesn't have to be expensive. It just can be very beneficial because even a small benefit amount, what we might consider small, can be very, very beneficial to many insurers out there. The cancer plan as a standalone product, as you can probably look at the screen here, it's a $10,000 to $75,000 benefit in $5,000 increments. The issue age goes up to age 85. We got 4 different rate classes: individual, single parent, couple, and family. The thing that you want to keep in mind when you're looking at the rate classes and you're trying to determine a rate, if you're doing it by with a regular paper rate sheet, when you're looking at a couple or a family rate, always use the oldest person in the household. Probably one of the coolest things, probably the coolest thing on the plan here is that we have a reoccurrence benefit, which restores the full benefit if the insured is in remission or treatment-free for a 5-year period. There's more to that story, so I'll go over that in a second here when we switch the slide over, because I'll tell more of a story here. But we also, as a standalone cancer plan, we also have a coverage for cancer in situ, which some folks may say, what's cancer in situ? It's most cancer plans will cover growth-spreading cancers, where cancer in situ is a localized cancer, where our doctor can go in, remove that cancer, and then there's typically no growth or spreading of that cancer. That's what cancer in situ is, and that's how they characterize, diagnose that. Now, the reoccurrence benefit, this is really cool stuff here. So if I were to get diagnosed with cancer, and let's say I had a $10,000 plan, I said earlier about the reoccurrence plan, if you were in remission or non-treatment for 5 years plus, you get a full benefit. So I get diagnosed with cancer, I get my full benefit. Now, let's say 4 years down the road, I get diagnosed with cancer again. I'm going to get 50% of my original benefit amount. So that means that in 4 years times I get diagnosed with cancer, I'll get $5,000 again from the plan. Or if it was in years 2 and 3, I'd get 25% of the plan, which is $2,500. Or if I got re-diagnosed with cancer again after 1 year of being in remission, then I only get 10% of the original benefit of my product, of my benefit there, and which would be, it turns out being about $1,000 in that situation. So there's no cap or limit to how many times that you can use this reoccurrence benefit. So if you have a client that happens to be very unlucky, and they get cancer 2 or 3 times, and they've been in remission for if they were in remission for 5 years and then they got another $10,000 for the second time, and then they go back in remission again for another 5 years on the second occurrence, and they get a third cancer after 5 years, they get another $10,000. So it does work that way, and there's no cap to that. Now, in addition to just doing a cancer-only product, the second product that you can create from our plan here with the CHS is a standalone heart attack stroke plan. Heart disease, we all know, is the #1 cause of death. You know, the numbers are right there in front of you. The #2 cause of death is cancer. Stroke is the #3 cause of death. Probably the biggest thing that I want to point out regarding the stroke side of it is that 25% of stroke victims will have a reoccurrence within 5 years. You know, that's pretty huge. You know, even with heart disease, you know, you got 470,000 will have a reoccurrence. You know, that's an awful lot of reoccurrence going on there. And that's where I think, you know, when we're talking about reoccurrence, we talked about that with the cancer. The heart attack stroke plan is going to have the exact same type of scenario going on there. So it's going to have a great benefit for those folks. Heart attack stroke works exactly just like the lump sum cancer. There is no difference other than the coverage, what it is. You know, so if I have a heart attack and stroke plan, if I have a heart attack today and I have a $10,000 plan, I'm going to get $10,000 for my heart attack. Now, if I were to all of a sudden, like, let's say 3 weeks after I have a heart attack, I have a stroke, I don't have a payout based on that. But I would have the, you know, I would be able to get a stroke payout by using the reoccurrence benefit, which I'll go over again here in a second. The exact same benefit limits, 10 to 75,000, 5,000 increment up to age 85. The same rate classes, individual, single, couple, and family, with the same, you know, oldest couple, oldest person in the household. The reoccurrence benefit is a little bit different. It works exactly the same way, but we have one additional benefit on the standalone, on the heart attack and stroke policy, which is if a person were to have a, let's say, go a physical, you know, and they find during the physical that they have some type of blockage, you know, and they need to do an angioplasty or a bypass, we will do it. We'll give them a 10% of their full benefit amount as a one-time payout by finding that due to just a, you know, physical. If the person had a heart attack or some event that caused that caused to have an angioplasty or bypass, then we wouldn't. That's not a benefit payable type scenario there. The great thing here is it's a standalone product, which is awesome. You know, so now it's because a lot of folks might not be concerned with cancer. They may only be concerned about heart attack, stroke, because, you know, they may have had, you know, siblings or parents or other relative members, you know, relatives that you know, had the heart disease or strokes, you know, and so that's why they may be more concerned with. You know, so you have a choice here. And another thing you can do here is you can offer your client a benefit amount, let's say a smaller benefit for cancer and a higher one for heart attack and stroke by writing 2 separate products, or you can do a higher cancer, a smaller heart attack, stroke. Okay, you got that option. Now, we talked about the cancer plan being as a standalone product, talked about the heart attack and stroke being a standalone product. Okay. Now, we do have that reoccurrence, which does work the exact same way on the heart attack stroke, so that there's no difference there, so you don't have to think about anything different there. But now the optional riders creates the third type of product that we can create with a CHS product. And the third type of product is that we can do a cancer plan with a lump sum heart attack and stroke rider. And we would also, that heart attack and stroke rider would also have the reoccurrence benefit just as it does in a lump sum. Nothing changes in terms of the way the product performs, with the only exception is that if I chose to have a $10,000 or, you know, cancer benefit, I'm going to automatically have to have a lump sum heart attack and stroke rider benefit of $10,000. I don't have the option and as a rider to have a varying amount for my cancer plan. If you have a client that has interest in that, having a different amount for heart attack and a different amount for cancer, then they have to write 2 separate policies. But everything will work exactly the same way if you add it on as a rider. No differences whatsoever. An additional rider that you can add on to, is an intensive care rider, which is an indemnity benefit, which pays up to $150 per unit. We've got a maximum of 4 units, so $600 a day can be paid out on the indemnity confinement benefit there for intensive care unit. Now, there's a 50% benefit of confinement for a step-down unit. A lot of folks are going to say, what's step-down unit? Best way I can explain it is that you got your ICU, and you got your regular room and board. That level right in between there, that's considered a step-down unit. So they get 50% benefit if they were being to go into that. We also do offer a return of premium with the CHS product. The return of premium is a we return all the premiums paid minus any claims if the insured passes away prior to age 85. If the insured passes away at age 85 or over, there will not be a benefit paid. The reason being is that if the insured does make it to age 85 with this policy and they have to return a premium, at age 85 we would remove the rider and remove the cost of the premium, and then the client can just continue on having coverage. And so they would get paid out on just if they had cancer, they just get their cancer amount or whatever the plan was that they had. So that's how that would work. The last rider that is available is a therapy and wellness rider. I'll tell you, this is probably one rider that I think should go on to every single policy that you would offer to a client. Therapy and wellness rider, the maximum cost of it on an annual basis is $31 at age 80. You know, if the age band's between 80 and 85, it's like $31 a year. And the first benefit you get off of this plan is that you got a choice of 27 exams that this person can take on an annual basis. You know, from PSAs to colonoscopy to mammography to mammograms and such. That if they do one exam each year, they choose one exam each year, they can get a claim. Put in a claim for $50 they can get. So it's not a matter they can do all 27 exams in 1 year and get $50 for each exam. There's just one $50 benefit per year for one of the exams that they may take on there. But there's some additional benefits that are part of that therapy and wellness riders. You can see the educational services or hearing, occupational, physical, speech therapy, mental health, and then lifestyle type visits. Those are all part of the therapy and wellness rider. From an underwriting perspective, it's a very simple product to underwrite. The answers are given by the insured. So you're asking the questions to the insured in the last 5 years. Have you been diagnosed or treated for cancer, yes or no? Have you had a heart attack or stroke, diagnosed or treated for heart attack, stroke, yes or no? Last 5 years. If they answer no to the health questions, you can submit the application and we'll issue the policy. Typically, the only exception I'll say is if you've never been contracted with GTL and this could be your first piece of business, typically I would tell you that if you get business into us by Thursday of a given week, we'll have it out by the following Wednesday. Your first piece of business will take a little bit longer time just because of the appointment process. But outside of that, it's very quick underwriting. It's very simple that you don't have to remember rates for male, female, or tobacco or non-tobacco. We don't do any front-end stuff. There's a variety of ways to submit applications. We can do it through email at und@gtlic.com. The way that, so if you take an application in person, you can scan it, attach it to an email, and send it up to us, and we'll process it, and then we'll draft upon issue. You can fax it to us, and we'll also draft upon issue at that point. Or if you prefer to take the first month's premium or quarterly, semi, or annual premiums, then you can go ahead and mail it to us. And just do it attention to your business at 1275 Milwaukee Avenue in Glenview, Illinois here. But just to kind of reiterate here, the only 2 times that you don't need to submit a first month's check for monthly premium is on the email or fax options. If you're taking quarterly, semi, or annual, or even monthly, if you're grabbing the first month's check on a monthly, then you definitely do need to mail that in to us. All right, so some of you that may have written some of our older our other version of our lump sum cancer policy, which is the supplemental solutions, you probably noticed pretty quickly that there's some differences between the two plans. And as you can see, we went from a $50,000 to $75,000. We issue ages out to age 85. We added a bunch of different benefits to the product to make it more flexible and a more solid of a plan for the clients. And then from a comparative perspective, when you're looking at the cost of the coverage, you're looking at only about $1 or $2 difference to the a little higher or even lower than the other competition that's out there. And just remember, the recurrence benefit is included, so it's not an additional cost to what we're talking about here. So you can get paid out on this policy is a number of different times versus just a one-time done and paid out and done scenario there. some other samples of what the premiums are here. You're looking at the $14.31 for a $10,000 cancer policy at age 40. Very affordable. Even at age 60 for $10,000, very affordable, $23.85 a month. If you were to do just heart attack, cancer with heart attack, stroke, we're still looking at very affordable premiums for the single parent or even the families from the family. When you're looking at family, I want to point out here, it's a husband, wife, and any number of kids. So if they have 5 kids or 10 kids, they're each going to have their own benefit amount. So if we're talking $10,000, it's going to be $10,000 for mom, $10,000 for dad, $10,000 for junior, Each of them will have $10,000 of coverage. On the single parent side, the same way. The mom or dad is going to be just one of the parents is going to be on that coverage along with their kids. And they're all going to have each individual coverage. So if you did just a heart attack stroke only plan, take a look at that at $10,000 at age 40, or even at age 50, when I'm probably going to be more likely to have a heart attack than $1,233 a month to get $10,000 in the event of a heart attack or stroke. Then if you added on the therapy wellness rider to that heart attack stroke policy, you see at age 50 under individual there, $1,427. It's only added a couple dollars a month, so very affordable coverage for your clients. People always ask why is it that who can I go talk to about this? Where's the opportunity? Where do I have a lead program or anything to that effect? Really, in all candor, you really don't have to have a lead program for this product, because you're already doing leads for existing plans, that you may be working on, Medicare supplements or Medicare Advantage plans or major medicals type products, or even just folks that talk to them about your existing product, your initial product, their initial concern. Then you always come back and bring up the cross-selling opportunity, like a CHS product, because what's the worst that they're ever going to tell you? They're going to say no. I kind of like to say, I had got a lot of no's before I finally got that yes and had my wife marry me. So it's, we got to get, it's a numbers game for us as, as salespeople, and the more no's we get, that means the closer we get to that yes. And you'll end up you'll probably be surprised how many yeses you will find out, getting from the agents. From the insureds. You can go and offer this product to a small business. The small business, looking for ways to be able to provide more benefits for their employees, but not without bearing the cost of it. And this would be a great option for those small businesses to take a look at some voluntary benefits there. We need a minimum of 4 lives to do a list bill. Probably something that maybe you may want to consider is that a lot of small businesses already may have a cancer type coverage due to do some other plans that were put in some number of years ago. So if they already have cancer coverage, don't forget you can always do a standalone heart attack stroke product, which then would supplement everything else that they got going on. So just I would just tell you, every time you're talking to somebody, bring it up. Let them know that they have the ability to have the coverage, because at the end of the day, it's a matter of taking dollar for dollar out of their savings account, 401ks, or wherever they have to pull the money from, home equity lines of credit, whatever the deal is, to help them treat these conditions, or would they rather spend a couple bucks a month to be able to get to a big benefit, like the $10,000 or $20,000 or $30,000, $40,000, $50,000 of benefit, which can definitely do a lot more good, for them. So I think I've hopefully shown you that the product is an awesome product. There's a lot of opportunities, for you as agents to be able to go out and talk and help create yourself an additional income source. And one last thing that's probably the one thing that I haven't brought up yet is that the reoccurrence benefit, as you recall, allows the policy, the owner to get benefits paid out over and over and over again. So if you get the policy owner that's paying out, it's getting paid out benefits over and over and over again, that means that their policy is not being terminated. Or so if that policy is not terminated, that means you continue to get commissions for a long period of time. And if anyone's ever talked to anybody that's sold any number of cancer plans in the past, the one thing that you probably should, if you haven't asked them, is to ask them is, how long do these policies stay in force? And the answer you're going to get inevitably is going to be, they stay on the books forever. And now they were staying on the books forever without the reoccurrence benefit. Now with the reoccurrence benefit, it could be infinity. So there's definitely some good incentive for us as agents to definitely want to sell and keep talking to our clients about this. So I'm going to switch a little bit of gears here. And the gears I'm going to switch into here is going to be talking about a hospital indemnity product called the Advantage Plus. The Advantage Plus is a standalone hospital indemnity plan. It's not a product that's standardized of any way or means. It's got its own standing on its own two legs. Okay. Most of y'all that are in the senior market are dealing with health insurance plans that have out-of-pocket exposures. The great thing about the Advantage Plus is that it's a standalone product. Being that it's a standalone product, it can be sold all year long. And being that it's sold all year long, that means you have the opportunity to keep in touch with clients that you may have only seen in the past once a year. The more times you touch a client, even with the CHS product or even the Advantage Plus, the more times you touch a client and more policies you have with them, it's going to create a more solid relationship with your client. And with more solid relationship with your client means that you become their insurance agent, which then that means anytime that anything they want to make changes or additions to, the chances of them calling you just increase exponentially and being able to help take care of them. So you're not going to have that losing of clients scenario that we always talk about. Again, this can be sold all year long, so it's definitely a great opportunity to continue to generate income throughout the year. There's the gaps in copays that you're looking at that people always talk about are the hospital confinement, the ambulance, the outpatient surgeries, cancers, and skilled nursing. Those are the biggies that are out there. I said that the Advantage Plus is a standalone policy. It is a standalone policy. It's not a Medicare supplement or certificate. It does not fully supplement any federal Medicare health insurance. So the reason why I really want to stress that is that I would really, really encourage you to not talk to your clients that have your MAs particular type of plans. Do not call this a Medicare Advantage wraparound plan. Don't call this a wrap plan. Don't call this a supplement to an MA. You need to call this a standalone hospital indemnity plan. That's exactly what it is. It's not anything more or less than that. So the details about the product here, I'll get into this pretty quickly here for you, that the base plan is a daily hospital confinement benefit. Many a times you'll find that MAs will have a daily confinement copay somewhere, it can vary obviously, but $225, $250, $275, $290, $325 in some instances out there. Whatever that number is, but we can cover that because we have a range from $100 to $600 a day of $10 increments of coverage day with a 10 or 21 day benefit period. The 10 or 21 day benefit period does restore if the insured uses that up after the insured's out of the hospital for 61 days or longer. Doesn't matter how you use up to 10 days. You can do it 3 days today, 3 days 2 weeks from now, another 3 days 2 weeks later. Once you use up to 10 days, however that worked out, you use up to 10 days. If you only did 1 day or 2 days, let's say the 2 days of being in the hospital today, and then you're out of the hospital for 61 days, you get a brand new 10 days again. So between doing a 220 or 220 10 day benefit period, that's pretty typical. 275 10-day benefit period is pretty typical of what we're seeing. It provides the opportunity for benefit even from further on down the road here. There's a number of various riders that are available. You can do an ambulance rider, cancer rider, skilled nursing rider, lump sum hospital rider, durable medical equipment, outpatient surgery, and then AD&D. The skilled nursing lump sum hospital rider those also restoring benefits if you're if you're in the hospital, if you're out of the hospital for 61 days or longer. The skilled nursing rider benefit is, as you can see, there's days 21 to 100 of $120 per day that's paid out to the insured. The lump sum hospital rider, on day one of being in the hospital, they can get a lump sum amount of $250, $500, or $750. And then they'll continue on top of that, get their daily confinement benefit too. So the durable medical equipment is an annual benefit of 30% of the first $1,000 of DME, which is maximum benefit basically of $300 a year. Patient surgery rider is a 2 times per year payout benefit. So it's $255 or $750 $1,000. So if we price it in that thinking that, the insured, if they go in the hospital, if they go for outpatient surgery, they can get $250 for each time they go in for outpatient surgery. So instead of $250, let's say it's going to be a $500 total payout if they went in twice. The ambulance rider that you see up on top there is a $200 per trip with a $2,500 lifetime max. It's an annual cost in most states. It's like $40 a year. This is something I would put on every single plan that I would talk to a client about. The last rider here that I want to talk about is the cancer rider. The cancer rider is, I believe and feel, is just as important as the daily confinement benefit that you're looking to protect for the client. The cancer rider, the reason why that's important is because the MAs have a radiation chemotherapy copay, which is 20%, which gets applied to the out-of-pocket max. If your out-of-pocket max is $3,500, $4,000, $5,000, $6,700, I mean, that's, a lot of them, they go with that. That's the range. Who's going to be responsible if they were to have radiation chemotherapy? It's not going to be radiation chemotherapy isn't a $1,000 or $2,000 or $5,000 type of treatment. A treatment for radiation chemotherapy is $40,000, $50,000, $60,000, $70,000, depending on the treatment they have. And they're going to be responsible for 20% of that up to the out-of-pocket max. So knowing the kind of numbers I didn't throw out there, $40,000, $50,000, $60,000, you're going to hit your out-of-pocket max automatically with, when you're dealing with those type of numbers. So the understanding here is that if somebody gets diagnosed with cancer, again, I said before, 1 out of 2 people will get diagnosed with cancer. They do radiation chemotherapy, they're going to have to pay that out-of-pocket max, and they're going to need to come up with that money somehow, some way. And if they're a retired person, that money's going to come out of their nest egg, somehow. So that's where the importance is of, adding the cancer rider. Now, if you were to ask, Dimitri, what do you see coming into the home office pretty consistently? We see daily confinement amounts with a 10-day benefit period. I see the ambulance rider, and then I also see the cancer rider. Those are the 3 most popular bundles that I see get submitted into us. Underwriting on the Advantage Plus is jumps to that issue. There's 5 health questions. If the answers are all provided are no, the policy is going to be issued. If the policies are offered or any answers provided are yes, then we'll stop the policy, stop the process there. Don't bother submitting the business. Again, if you submit the business by Thursday of a given week, we'll have it out by the following Wednesday. The advantage to you now, and to the clients here is that you're offering the health plan, the MA. The MA has some coverage gaps. You're also getting paid a commission on that MA. So depending on the way it works. Now with the Advantage Plus, you have the opportunity to make the same commission or even more commission than what you made on the MA plan. So then in turn, you're going to be doubling your potential income per person in that household. So if you had, for example, if you had a commission, if you had a situation there where you had a husband and wife, and let's say you're making $200, then you just made $400 for each person in that household. So it's a good deal overall I think for the insured, because now you're taking away some of the exposure that they have, but then also the from your perspective, you definitely get the opportunity to generate that, a really good first-year comp for yourself. At the end of the day, it is a win-win situation for everybody involved, for the agents, for yourselves as agents, the insureds. And another thing to take a look at is that you also want to talk to your clients that you have sold MAs to about adding an Advantage Plus type product, because you want to try to avoid that phone call from their children. What do I mean by that? Probably 9 times out of 10, when you sit down and talk to somebody about their Medicare, they're not going to have their kids there. Their kids always show up after the fact when the mom and dad, don't tell them what they've done until they went in the hospital, and the kid says, well, Mom, Dad, why are you paying X amount of dollars due to, for these co-pays and this and that? They're going to get really upset because now the larger dollar amount has to come out of the nest egg of the parents. And so by having an Advantage Plus, it helps offset those some of those bigger exposures that they have, and you probably help fend off some of those upset children calls that agents most potentially can get. From a GTL perspective, we do have a GT Link, which is an online pending notifications type system, and you can download forms on it. We do have access to an agent portal system, which what that means to you is that you can submit the business online. We can do that with Advantage Plus right now. I should have updated the slide, but you can add you can take an application and put it on our portal and then submit the business. And we'll do a draft upon issue for that. Also, our commissions statements are also offered online. We do not mail out any longer the commission statements. We do have a marketing support area, which is available to you, in addition to Medicare Advantage specialists. We definitely can be there to help you there too. You can contact us here at the sales support area at 800-323-6907. Or if you have any questions, feel free to email us at agency@gtlic.com. And we're here Monday through Thursday, Eastern time from 8 to 6, or Central from 7 to 5. And then on Fridays, we're here from 8 to 12 Central time, or 9 to 1 Eastern time.